Today, we are examining an important question that frequently appears in Iraqi dinar discussions. If Iraq were ever to redenominate its currency, would that process happen at the same time as a change in the dinar's exchange rate? A recent commentary argues that a redenomination could involve a defined exchange period, a deadline for exchanging old banknotes, and potentially a change in the currency's value designed to encourage people to bring cash back into the banking system. These are important concepts to understand, but they also need to be separated carefully from speculation about what the Central Bank of Iraq may or may not do in the future. Let us begin with the basic distinction. Redenomination and revaluation are not automatically the same event. A redenomination generally means changing the face value structure of a currency, often by removing zeros. For example, if a government officially decided to remove 3 zeros, a 25,000 dinar note could theoretically become a 25 dinar note under the new denomination system. The purchasing power of the underlying amount does not automatically increase, simply because the number printed on the note becomes smaller. That is why redenomination should not automatically be interpreted as a sudden increase in wealth. A revaluation, on the other hand, refers to a change in the currency's official exchange value relative to another currency or within an exchange rate regime. These two policies can theoretically be implemented together, but they do not have to be. A government and central bank could redesign the currency first and maintain broadly the same economic value, or they could change the exchange rate framework separately. The precise outcome would depend on the monetary policy objectives, inflation conditions, foreign exchange reserves, banking sector stability, fiscal policy, and the overall condition of the Iraqi economy. The commentary we are analyzing uses Iraq's currency exchange following the 2003 war as an example. There was indeed a major currency replacement in Iraq during that period, when the Coalition Provisional Authority and Iraqi authorities introduced the new Iraqi Dinar notes that replaced the old Saddam-era currency. The transition involved a defined exchange period, and old notes eventually ceased to be legal tender. That historical example demonstrates that a currency replacement can be organized around a formal window and an end date. However, there is an important distinction between what happened in 2003 and what might happen today. The 2003 currency replacement occurred under extraordinary circumstances following regime change, war, severe monetary disruption, and the collapse of the previous political and financial system. It should not automatically be treated as a blueprint for a future monetary reform under a functioning Iraqi state and central banking system. The idea of a deadline is nevertheless economically interesting. When governments replace old banknotes, they typically need a mechanism that encourages people to exchange them within a specified period. Otherwise, old notes can remain outside the banking system for years, creating accounting, security, and monetary management complications. A clearly communicated exchange window can therefore help authorities identify how much currency is being returned and how much remains outside formal circulation. That brings us to another important point in the commentary. The large quantity of Iraqi currency believed to circulate outside the banking sector. Iraq has long faced challenges involving cash usage, public confidence in banks, informal economic activity, and limited financial inclusion. If a future currency reform were ever introduced, bringing physical cash into banks could be one of the major operational objectives. But that does not mean authorities would necessarily need to offer a dramatically higher exchange rate to accomplish it. The commentary suggests that giving people a better number could encourage them to empty cash also kept at outside banks. This is possible in theory, but the economics are more complicated. People decide whether to deposit cash based on many factors, including trust in banks, access to financial services, concerns about taxation or documentation, convenience, interest rates, inflation expectations, and confidence in the overall economy. A currency redesign alone cannot solve all of these issues. There is also a critical question about how an exchange would actually be structured. If old notes were exchanged for new notes at a one-for-one economic value after adjusting for removed zeros, that would primarily be a redenomination. If authorities simultaneously change the exchange rate against the US dollar, that would be a separate policy decision. The two could be coordinated, but one does not automatically prove the other. For Iraqi dinar followers, this distinction is extremely important because many online discussions combine the terms delete the zeros, redenomination, revaluation, and RV, as though they describe exactly the same event. They do not. Understanding the terminology helps investors and viewers evaluate claims more objectively and avoid assuming that a currency reform automatically produces a specific dollar value. The short-term economic implications of an actual redenomination could be significant. Banks would need to prepare new notes, accounting systems, ATMs, point-of-sale systems, government databases, contracts, salaries, pensions, and financial records. Businesses would need to display prices in the new denomination, and the public would require extensive education to prevent confusion and fraud. There could also be temporary pressure on banks as citizens exchange large quantities of physical currency. Authorities would need strong anti-counterfeiting procedures, identification systems, cash logistics, and clear rules concerning damaged, obsolete, or suspicious banknotes. A successful currency transition, therefore, requires much more than simply printing new paper. For the Iraqi economy, the long-term implications would depend heavily on the reason behind the reform. If redenomination were part of a broader strategy involving banking modernization, electronic payments, improved financial regulation, stronger institutions, lower inflation, and greater public confidence, it could contribute to a more efficient monetary system. But if the underlying economic problems remained unresolved, changing the numbers printed on banknotes would not by itself create sustainable economic growth. The exchange rate question is even more sensitive. Iraq's dinar policy is managed by the Central Bank of Iraq, and any meaningful change to the official exchange rate framework would be a major monetary policy decision. Such a decision would need to consider inflation, foreign reserves, government finances, imports, exports, dollar demand, banking sector conditions, and broader economic stability. This is why claims that a specific new rate is already guaranteed should be treated carefully unless supported by an official announcement from the Central Bank of Iraq or another authoritative Iraqi institution. Numbers circulating online can generate enormous attention, but attention is not the same thing as confirmation. Another point from the commentary deserves careful consideration. The suggestion that silence or official denials would indicate that a currency operation is close. There is no reliable economic rule that government denials prove a secret currency event is approaching. Central banks often communicate carefully because monetary policy can be sensitive, and authorities may avoid commenting on speculation. But a lack of confirmation should not be interpreted as hidden confirmation. For viewers following the Iraqi dinar, the most useful approach is therefore to watch for measurable developments. Look for official central bank statements, changes in monetary policy, published currency and money supply data, banking sector reforms, developments in electronic payments, international banking integration, fiscal reforms, inflation trends, and government decisions that directly affect the monetary system. If Iraq eventually decides to introduce a redenomination, there would likely be extensive preparation and public communication. Banks would need instructions, businesses would need conversion guidance, and citizens would need to know exactly which notes remain valid, where exchanges can occur, how long the exchange period lasts, and what happens after the deadline. Those are the kinds of details that would distinguish a genuine monetary reform from online speculation. For the short term, therefore, the key message is caution. A redenomination could change the numerical appearance of Iraqi currency without automatically changing its real purchasing power. A revaluation could change the exchange relationship with the dollar, but that would be a separate monetary policy decision. And while both could theoretically occur as part of one broader reform program, there is no basis to assume they must happen simultaneously. For the long term, Iraq's economic fundamentals remain far more important than any single headline. Stronger banking institutions, improved financial inclusion, diversified government revenues, controlled inflation, transparent monetary policy, efficient payment systems, and greater confidence in the financial sector would provide a more durable foundation for the dinar than any sudden numerical adjustment. So, as we continue monitoring Iraqi dinar developments, the central question should not simply be, what rate will the dinar become? The more important questions are, what policy has actually been announced? What economic problem is the policy designed to solve? How will the banking system implement it? And what evidence exists that the new policy is sustainable? The historical experience of Iraq shows that major currency transitions can involve deadlines, replacement notes, and significant logistical operations. But history should be used as context, not as proof of a predetermined future outcome. until the Central Bank of Iraq or the Iraqi government officially announces a specific redenomination, exchange window, or exchange rate change. Viewers should treat precise future rate claims as speculation rather than established fact. We will continue following the official developments surrounding Iraq's monetary policy, banking reforms, currency circulation, and the Iraqi dinar, so that you can separate confirmed information from rumors and expectations. If you found this analysis useful, make sure to subscribe to Iraqi Dinar News and like the video for responsible, factual, and carefully explained Iraqi Dinar updates. Thank you for watching. Stay informed, stay patient, and always verify major currency claims through reliable official sources. This content is provided for informational and educational purposes only and is not financial advice or a recommendation to buy, sell, or hold any currency.